Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame with the bearish scenario where we're looking for a three-wave corrective structure, after which we expect continuation to the upside. Wave Y can either be a zigzag structure, a flat structure, or a triangle. That very much depends on the lower time frames, but based on the lower time frames, a single impulse 1, 2, 3, 4, 5 is invalidated, which therefore in a wave Y leaves two options, either a flat structure in an ABC or a triangle, but a triangle is too early to call and also less common in a wave Y, so therefore the flat structure will have a higher probability. The common target for your wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of X, giving you a target between 63.2k and 54.3k, with the extension target being the 1.618 at 48.9k. Inside wave Y, we are then looking for a flat structure at the moment, which means that the move towards the downside has to be counted as a three-wave structure. On the chart, you see a double zigzag WXY, ABC and W, corrective structure in X, and another ABC to the downside in a wave Y, which is then finishing wave A. In this scenario, we are then looking for a wave B to the upside and another C to the downside. Wave B has to retrace to at least the 0.9 Fibonacci taken from the start to the end of wave A, but the most common target for wave B is between the 1.236 and the 1.38 Fibonacci taken from the same pivots for an expanding flat, because an expanding flat is the most common flat pattern. After B is finished, we're looking for C to the downside. Now inside a wave B, by far the most common pattern is either a zigzag or a double zigzag, meaning a 5-wave structure, or a WXY with inside W an ABC zigzag and inside wave Y an ABC zigzag as well. Now the reason that I put the 382 on the chart, which is the target for your wave Y on the daily time frame, right, which is sitting on the 3rd of June, is because this wave A finished quite quickly. If we want to see a flat structure in the higher time frame daily wave Y, we need quite a long wave B to make up for the short amount of time of A. If we get a wave A, a wave B, and a wave C, this corrective structure, as in a flat, is ending too soon to end your wave Y, because preferably your wave Y is ending after the 382 sitting on the 3rd to 4th of June, right? So therefore, inside this wave B, we preferably have a longer corrective structure to the downside before a second leg up to finish wave B before a C to the downside. So time is playing an important role in this particular scenario. As long as price did not touch the 0.9, the invalidation is taking out the low at 66.2k. Going back to the daily time frame, your second bearish scenario is an ABC zigzag 535. Here in wave A, we have a leading diagonal 1, 2, 3, 4, 5, a three-wave corrective structure in B hitting the 886 common target for B, looking for a C to the downside, with the invalidation being the all-time high. This means, however, that on the low time frames for your wave C, you want to see impulsive structures to the downside, because a wave C should be a 5-wave impulsive move, 1, 2, 3, 4, 5. However, locally, this structure to the downside here can't be counted as a normal impulse anymore in a 1, 2, 3, 4, 5, because your wave 4 retraced too high, invalidating an impulse to the downside. This means we have two more options, either a double 1-2, 1-2, 1-2, big move down in a wave 3, or a potential diagonal. If we think about a double 1-2, then this needs to be your wave 1, your wave 2, another 1, another 2, and continuation to the downside. Your invalidation is taking out the high at 70.6k over here, and we want to see corrective structures to the upside. Now what lowers the probabilities for a double 1-2 is that your second wave 1 here is longer in price than your first wave 1. Preferably in a double 1-2, 1-2, 1-2, maybe another 1-2, you want to have your second 1 and 2 shorter in time and price compared to your first wave 1 and wave 2, but that is not the case. It's not an invalidation, it just lowers the probabilities. Alternatively, we have a diagonal where either this is your 1, 2, 3, 4, 5 wave structure, but this would lead to an expanding diagonal, which is very rare, never preferred, and therefore low probabilities. Or you only have a finished wave 1, you look for a 2 and a 3, 4, 5 still to come, but it is way too early to start talking about this. So in other words, on the daily time frame, this scenario being an ABC has lower probabilities at the moment compared to a WXY. If we then go to the bullish scenario where your low is in and you're looking for continuation to the upside, we're looking for a wave 1, 2, 3, 4 and a wave 5. In this particular scenario, due to the lower time frame here, preferably your wave 4 low is made. There is not much support below this low and the invalidation is very close at 65.5k, because in an impulse we don't want to see overlap between a wave 1 and a wave 4. The common target area for your wave 4 is between the 3A2 and the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target between 67.5k and 66k. It is preferred, interestingly, that wave 4 ends after the 1-to-1, which is not the case if this would be the low and you now have impulsive continuation. The reason is that wave 4 is most commonly longer than wave 2 in time. So if you take a fib time from the start to the end of 2 to the end of 3, comparing 2 with 4, you can see that the low is made before the 1-to-1, which is less common. So that is something we have to keep in mind. However, as mentioned, preferably at least your low in wave 4 is in. And if you do count this structure as a WXY double zigzag, a double zigzag can only be part of a wave A, a wave B, a wave C and a wave D of a triangle, and a wave X. But this is a starting structure on the 4-hour time frame. If this is the end of 3 and you're looking for your green 4, this is the first move to the downside, which means we can only in that case label it a potential wave A, but that in turn then means we have to look for a flat in an ABC. The most common flat is an expanding flat, with the second most common flat being a regular flat. In both cases, you're taking out the low, which therefore increases probabilities to hit the invalidation on the 4-hour time frame, which increases probabilities for the bearish scenarios instead of the bullish scenarios. So a lot of information there, right, in a very short amount of time, but this is how everything from an Elliott wave point of view is syncing together, right? So if this is your low of wave 4, which is definitely preferred in this particular scenario, you want this to be a wave 1, 2, and look for an impulsive structure to the upside. Now, what is not really supporting a great impulsive structure to the upside at the moment is your wave 2 here. If we take a fib time from the start to the end of your wave 1, comparing wave 2 with wave 1, your wave 2 is 11 times longer in time than your wave 1, which is very uncommon, right? That's quite exceptional. Now then you have a second 1-2, which is perfectly fine. So we can count a 1-2 here and another 1-2, looking for a 3-4 and then a 5 to the upside. The reason that I put wave 3 over here, wave 4 over here, and I'm looking for a wave 5 is because of the length of this range and this range over here. Let me explain. If you put wave 3 here, wave 4 here, and wave 5 at the high, then what we're having is a impulse to the upside, 1, 2, 3, 4, 5, perfectly fine. But what do we do with this range and this high? If we count a flat in an ABC for the blue wave 4, if we label this 3, and we label this 4. So if we count a flat in blue for A, B, and then a wave C to the downside, your wave C is longer than twice the length of A plus B, which significantly lowers the probabilities that this is a wave C of a flat, right? So in other words, the probabilities are higher that this is another structure instead of a wave C, which therefore increases probabilities that this high here is not a wave B high or a wave X high, it is another high. So therefore impulsive high. That's pretty much the only option that we have. But if I put wave 5 there, then where is your wave 2 compared to your wave 4 here, right? Because inside 5 you need to count a 1, 2, 3, 4, a 5 wave structure. But as you can see on the lower time frames, all of the ranges here are very, very short, while your wave 4 is very, very long. So that also doesn't really support the impulse to the upside counted in such a way. Now this is the main reason why therefore I prefer the wave 5 to not yet be finished, move wave 3 here, move wave 4 to the low that we have at the moment, and still look for a 5, finishing 3, finishing 4, finishing 5, having a 1, 2, 1, 2, 3, 4, 5, then another wave 4 that is finished and currently starting a wave 5 to the upside. If price takes out this low before taking out the high here, it decreases probabilities for this structure to the upside to be an impulse, and that is because of time. If we compare wave 2 with wave 4 in time and take a fib time from the start to the end of 2 to the end of your wave 4, toggle on the wave 4 target, then you can see over here that the low is made before the 6 fib time, which is still okay. But if price moves to the downside, takes out the low before making a new high, there's a problem. It lowers the probabilities for an impulsive scenario on this time frame. So therefore, preferably, this is the low of your 4. You're going to move to the upside and make a new high. Talking about some support and resistance, we have some resistance to the upside here, 68.9k to 69k, and also above that we have some volume levels of the previous range over here. We test the value area low, as you can see, we've tested that one. Point of control, the red line at 69.8k, and then the value area high at 70.1k, with the next blue box being between 70.8k and 71.1k. Looking at these CVD divergences, we have both bullish and bearish CVD divergences. The smaller bearish CVD divergence here already played out as price took out this low. So now we have the bullish and the bearish CVD left. Bit of a mix. See what price is going to do and what other signs it's going to give us on, for example, a 3-minute time frame. If we then talk about the probabilities of the different scenarios, then at the moment it is quite simple. The bulls, preferably your low is in, right at the low over here, and you're going to count an impulsive structure to the upside. In other words, you do not want to see this low taken before taking out the high here. For the bears, you do want to hit this low before taking out the high. Currently simply waiting for more candles to be printed here to get some more clarity about what direction price wants to go. And it is something to note that due to wave 4 being 11 times longer than wave 1, I'm not yet fully confident about an impulse to the upside on the higher time frame with a wave 4 already being finished. Just being patient, let the chart speak, see if we take this low or the high here first, and then we take it from there, right? So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.